is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Serve the one you love. Once you decide to be a couple, you're there to serve the one you love, to serve your love to your love. And every kiss and every touch, you feel you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We have the Dow Industrials up 54, NASDAQ up 47, S&P's up 15, gold contract down $11.90, trading at $12.27 an ounce. Silver down 21 cents, $15.60 an ounce. Light sweet crude flat, $68, 6 pennies. Notes and bonds just refuse to back off. 10-year note down one tick, 120.04. 30-year bond off 2, 145.02. King dollar up 448 ticks, trading 94.720. The euro is at 116.61 to 1 U.S. dollar. The yen is at 112.84 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Let's go take a look at the world of gold first. We're going to put it on a continuous contract. They slammed gold down. Gets under its lows out here today. We're at 12.27. We put this on a continuous contract, and what you've done is this, is that you're broke the swing point of December 15th, which is 12.36, and that lays up basically a pretty heavy number, because what you have is this. The high of the swing from July of 2017, a year ago, is 12.32. The low is 12.04. Right now, we hit the 12.25 on the intraday level. So we'll see how this is going to handle this level right where we're at. Silver, we take a look at the silver market. They slammed the silver market also. Silver market out here right now is trading down 1.5%. You're at $15.60. We take a look and we put silver up in a continuous contract. What we have with silver up here, pull this baby back also 3 years. What you have with silver, silver is going, you have the swing point from December, which is $15.55. That's where we're laying. Your lowest swing here is $15.15. So this is a consolidation that we have been in going all the way back to October of 2016. The GDX, different ball game. Now this is pretty impressive as to especially how they slammed gold and silver, and the dollar went higher. GDX out here is rejected lower price at its lowest swing point. It's going to have lighter volume. Bottom line is that as long as we hold $21.80 coming into the close, you're going to be fine. We're at $21.83, so you're talking 3 pennies in this move. Some of the higher volume equities. So, well, actually, let's go look at Netflix first. So Netflix got blown out of the water last night. Netflix is trading down $22, which is nothing because it was down $54. We actually got down, let's see, 40. Yeah, it was down $56. That being said, guess what? Bottom line, you have a high volume low that will get tested. Right now, we hit a low today of 344. You're at 377. If we take a look at this, what you're going to see is that you didn't quite get up to the gap. You know, strong though, man. Just they were buying Netflix all day long. I mean, you can see this trend. It opened at its lows. Well, it actually opened at $346. went to 344, and then just start climbing and start getting some acceleration. When we talk about acceleration that we haven't seen in a long period of time, if we go over to Bitcoin and take a look at Bitcoin, what you're going to see, Bitcoin is up $685. You're trading at $7,347. Last 3 days, Bitcoin has gone from $6,081. So it's gone up 1,300. And if you have been listening to our man, Mr. Jason Path, which we have on Mondays, and he's going to be on this afternoon as well as Thursdays. Basically, he was all over this, so it's pretty cool. It's pretty amazing. This is the biggest bid Bitcoin has got since April 12th. April 12th, it went from 6,700 up to 8,000, big expansion. Got all the way up to the 9,700, then fell apart and got all the way back down to 57.91. So there's action. There's action inside Bitcoin once again. Some of the higher volume equities out here, let's take a look at it. So we have, let's see, Ford is up 4 cents. You get Comcast down 59. We have Oracle up 33. Wells Fargo is down 30. Facebook is up $2.10. Let's go take a look at Facebook. Facebook just refuses to back off. Facebook got to a low today of 204. It's trading 209, and 209 is a new all-time high. Google, we go take a look at Google. Google right now is trading up $14. This had traded down today to a price point of $11.70. Right now, you're at $11.97. We go over to Amazon. We take a look at Amazon. Same setup. Pretty amazing, actually. Amazon $17.97 was the low. Right now, you're $80 higher. The $60 higher. You're at $18.48. That also is a new all-time high. And all those equities, folks, let's go to Microsoft next. So all those equities, last night, Microsoft's also at an all-time high. It's up $1.45. When Netflix came out with their numbers last night, each one of those went south, and bottom line is that had taken the NDX 100 down 63 points at about a heartbeat. Pretty amazing. The XLF, so financials had caught a nice bid the last couple days. Bottom line is that what you're doing now is that you're getting closer to the higher end of this consolidation, which is $28.27, and you're dying on the vine. Now, this is going to get really interesting about the financials. This is why. They've had a huge problem with the downdraft of February 9th. February 5th through February 9th. You're coming into monster volume. They broke down. They got way underneath that downdraft. You got a nice sign of strength, and then all of a sudden you're just giving it up. And Goldman is one of the ones that is going to keep pressure on them. Yeah, that Goldman come out with great numbers. Bottom line, guess what? They're selling it. Not huge, but they're selling it. Berkshire Hathaway, BRK. Let's go take a look at Berkshire. Berkshire is the largest weighting structure inside the XLF. Berkshire just can't handle it. Berkshire Hathaway down to $1.16. Let's see when Berkshire comes out with their numbers. So Berkshire, August 3rd. August 3rd, they come out with numbers. Stay right there, folks. Come right back. We have the Dow Industrials up 71, NASDAQ up 52, S&P's up 16.5. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 72, Nasdaq's up 51, S&Ps are up 16. If we go over to the Dow Industrials, we take a look at the strength versus the weakness inside the Dow Industrials. Putting juice into it out here is that you have Johnson & Johnson putting 28 positive points, Home Depot 15, United Technologies 12. The negative, you have United Health taking away 48. It's putting negative 48 points in. It's down $7. You got IBM putting 11 negative, Goldman Sachs 8, Chevron 5, Intel 2. If we go over and we take a look at this oil market, so oil's been moving quite a bit. You have oil out right now, flat out here today. You're at $68.02. And what you have, we got to a low today of 67.03. You're at 68.02. Bottom line, the strength, as we had gone topside on the 22nd of June, starts at 65.71. So I expect we're going to see that 65.71 get tested. If we take a look at the unleaded market, so of course that's what we're really interested in because we're all using gasoline on a continual basis. Right now it's 202 wholesale level, 202. The way this is trading out here, we'll see if in fact this lowest swing point holds. The lowest swing point we're talking about is 1.98. What we did out here yesterday is that we came down to $2. Today, what did 1.99? Now, what you do have today, your volumes decreasing somewhat. So, bottom line is that it'll have a shot to get some kind of a dead cat bounce tomorrow. At 4:30, of course, we have the API numbers at 4:30 tomorrow. Then we get the EIA numbers on Thursday at 10 a.m. We go take a look at the. Let's go take a look at inside Intel. Intel right now, not much juice. So that's trading 51.69. They're going to be coming out with numbers on the 26th. And, you know, the bottom line is that these chip stocks, SMHs, let's go take a look at the SMHs. Because the SMHs, well, this could get interesting. So the SMHs rejected lower price out here today. Doesn't have enough juice. We know we're down. The SMHs have topped out in March at 114. You're at 105. And we'll see whether it can get any juice. You know, bottom line is that this might get a pop up into the 107 area. The Amazon Prime, that is going to the rest of today. And, of course, Jeff Bezos, he was at $150 billion yesterday. $50 billion worth more than the second richest man in the world, which is Bill Gates. And today, guess what? This is up another $8 over the high of yesterday. So I can imagine what that wealth is right now. It's pretty amazing, actually. So Amazon's going to be coming out with numbers also on the 26th. 26th, Amazon's coming out. If we go back to the, let's go back to the gold market for a second. We take a look at the XAU, the HUI. Both XAU and HUI's rejected lower price out here. The lowest swing point in the XAU is $79.31. We get down to 79.56. You rejected it. You're at 80.18. The Gold Bugs Index. Now, what's intriguing is that the Gold Bugs Index last week actually got stronger than the XAU, and that was the first time in quite some time that happened. That's a good indication. Bottom line is that we are going to basically get into higher price inside this market. The Gold Bugs Index, the lowest swing point is $169. We got down to 171.56. It rejected it. Bottom line, we'll see whether they get any juice out of that. So decent numbers. If we go take a look at the SLV, which trades at 10%, well, it trades at the price of silver. We take a look at the SLV. SLV right now is coming back into the strength that was generated in April of 2016. $14.08 is the low of that. We got the 14.62 out here. Your other swing point, which it actually did, no, it hasn't hit that yet either. Interesting. No, yeah, 162. Yeah, it hasn't. So it looks like we haven't even got down. This is so with the SLV, we haven't even got down to the price point, the swing point of the July of last year. Big Blue, we go take a look at Big Blue. That Big Blue right now, that's coming out with numbers on the 18th. That's down $1.57, and that's having a hard time also getting up and over. It's February 9th downdraft. 144.39 was the February 9th downdraft. What you're seeing out here is that you get a handful of equities that this February 9th downdraft is turning into a real problem. What has happened is that they come down and test it, they get below it, and then as they're going back topside, they're trying to get above it, and they just can't handle it. So the euro, let's go take a look at the euro out here. Euro trading at a price point of 116. That little baby, we'll see whether it's going to try to test the we're at 116.62. We'll see if that 116.34 is alive to get a test. Inside the GDX, it's Newmont that basically starts saving the GDX this morning. Newmont rejected $36.21. The low that it was going into was February of 2016. That low had 11 million shares. Yesterday we only did 3.1 million. Today did 3.5. So you're going to get a clear rejection of lower price with the test, and then on top of that you get a nice bullish engulfing if you happen to be into candlestick charting. And we'll see whether it can get any follow through. What we haven't got inside the metals market. The metals market is diverging, no doubt, from the actual gold equity market as well as the silver market. If we go over to AG, AG came out with numbers last night. This is First Majestic. AG goes lower today, has volume on the move lower. This is small ABC down. Let's see, it's 850. Well, it's a buck ABC down, so that lays out 664, and we hit 682. And you do have volume behind that move. It's going into the May 10th area. It's going to need a lot more volume to break that, but we'll see. The price projection on that is 20 cents lower than where we are right now. Pan American Silver. Pan American Silver also PAAS. This was a little rocket ship on the way up. Today has also rejected its lower price swing. We got down to 1603 or at 1635. This is coming out with numbers, let's see, August 8th. So we'll see how that shakes out coming up August 8th. Facebook, when is Facebook coming out? So we got Facebook's coming out the 25th of July. Okay, so we got Microsoft, Intel, NVIDIA, NVDA. So let's take a look at NVIDIA. NVIDIA is coming out August 16th. NVIDIA is trading at 253 inside the chip business. And this is coming into its downdraft. So NVIDIA, but volume's not bad. You get 7 million shares out here. You're really looking for 10 million. But if that thing can hold price out here today, we traded from a low of 245, you're 253. The swing is 254.14. 877-927-6648. We have the Dow Industrials right now up 88. NASDAQ is up 58. S&Ps are up 18. Come right back, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is up 83. NASDAQ is up 56. S&Ps are up 17.5. We had the Chairman Powell, Federal Reserve Chairman Powell, speak this morning, folks, and that is one of the things that absolutely slammed gold. It took the dollar topside. The movement on bonds, though, just wasn't there. And he got asked some specific questions. So if we take a look at what he had to say out there, let's see. He reaffirmed that gradual interest rate hikes are the best option for now. He's pleased with the labor market and the pickup in the pace of inflation. He answered questions about the Fed's stress test and even confirmed that he doesn't view the European Union as an enemy of the U.S. Of course it's not an enemy. Amazing. Let's see. If you raise short-term rates higher than long-term rates, then maybe your policy is tighter than you think, or it's tight anyway. So what he was getting into, what they were asking him about specifically, was the yield curve, folks. That's the difference between the 2, the 5, the 10. And right now, bottom line is that, you know, many market watchers are watching that because the theory is that if it does get close to inverting or invert, you're coming into a recession within a year, year and a half. In answering a question from Senator Pat Toomey of Pennsylvania, Powell said that, in his view, what really matters is what the neutral rate of interest is, and perhaps longer-term Treasury yields send a message about that rate. Powell's comments suggest that while the central bank views a Fed funds rate of 2.875 as more or less neutral in the long run, as suggested by their dot plots, if the 10-year yield remains locked in the range around 2.85, then perhaps policymakers will have to pause to rethink things, okay? So they are looking, Powell suggests that while the central bank views Fed funds rate of so this is what it is. So the Fed funds rate, folks, is the short-term rate. And right now we are trading on the 10-year rate is 2.865. So that would basically put that thing on a inversion pretty quickly. The big question facing central bankers and bond traders alike, no one knows exactly what tightening should look like, of course, after years of the amount of monetary stimulus that we've got. Bill Gross' decision to scale back his bet that U.S. and German 10-year yields would converge. Instead, the spread is widened as the Fed goes it alone. So what has happened, of course, is that the Federal Reserve is still looking. In fact, let me do this way, and we'll take a look at what your probabilities are going forward. So in the Fed Fund futures rate, if we take a look at the next meeting is August 1st. So August 1st, you have a probability of 20% that you're going to get a short-term rate. So they're not looking to raise rates on August 1st. They are looking inside the futures market that they're going to raise 25 basis points again on September 26th. We'll see how that shakes out. That would bring your short-term rate. Right now, the short-term rate is 1.75 to 2. You know, the effective rate, so what the Fed does, folks, they go between 25 basis points on bank-to-bank lending overnight. The actually effective rate that they were trading, lending last night was 1.91. You know, most times what I've seen when we started this raising rates, as soon as they raise the rate, the effective rate normally is pretty close to the top of the range that they're doing. So the next rate range would be 2.2% to 2.5, and that's what all these articles are about, and that's what these speculations are about, meaning that as the short-term rate has gone up, the 10-year has not gone up as much as the Fed has been expecting. That's what's going on. Not the 30-year. The 30-year is not even close. If you want to see something that's pretty wild, here, watch this. We bring this up, and we take a look at, so the 10 years at 2.8. We take this and we put it to 30-year. You're look at this. This is pretty sick. You're at 2.9. So imagine you are basically lending money to the U.S. government at only, basically, is it 100 basis points for 20 more years? Let me see this. 862. Yeah, oh my God, it's 107 basis points. That's it. That's pretty insane. You're not even talking a percent. It takes, that is intense, folks. Let's go take a look at the 20-year plus TLT. Same setup. The 20-year plus TLT, we are at the 121.95. That's laying right at the highs that were generated out here on the 29th of May. And if we put this on a 121, so it's, yeah, so you're right into where the flack is too. When we came down in November of 2016. That's when rates basically took off big time. The 20-year TLT went from 131 to 121. We'll see if it makes it through this area. I mean, it makes it through 122.25. You get game on, then that game on there would be 128 bucks. So there's some decent numbers out here. Let's go back and take a look at the Bank of America. Bank of America came out with numbers yesterday. Now, the numbers they came out with yesterday were good numbers. What's more impressive for Bank of America is that Bank of America basically took the rest of the banks higher yesterday. You know, Bank of America had closed on Friday at a price point of $26.69. Yesterday we go to $29.85. Today you're at $30.08, and the volume's not bad either. We're starting to dig into the downdraft from February 6th to February 9th. It's going to need a lot more juice, but it looks to me like Bank of America will make it up to this $30.41. Citigroup trading at a price point of $69.52. Differential is huge. This is what the differential is. You went topside yesterday. You got to a price point of $69.71. You had volume of 26 million. Guess what? 13 million today. That's not even close. And what you have with Citigroup is that your downdraft from February 5th to the 9th is much, much higher. $71. You are at $69 right now. That is going to take some juice to get up into that area. After the close out here today, we're going to have CSX. Let's go take a look at the railroad. So CSX, big railroad, is going to be coming out with numbers. The low for the year is $47. The high is $67. Your PE is 19. Let's take a look at this. So what time is this coming out? Okay, it just says aftermarket out here. So bring this back. It's been on quite a tear, no doubt, but put this on a monthly. Well, on a monthly here, this is saying it's going to pull back. It's going to be pretty cool to watch this shake out. We are at $64. This is saying it wants to pull back to $58.35. So that's going to be intriguing, watching that baby come out. We got United Airlines, United Continental. They're going to be coming out with numbers. The low for the year is 56. The high is 80. This has a PE of $10.5 rather. And we take a look at this. This is coming into a monster downdraft. That also wants lower price. So we're going to know in 22 minutes. Stay right there, folks. Come right back. Dow Industrials up 77, NASDAQ up 56, S&P's up 17. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers not I use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. You talk about retail rents, so check this out. This is pretty amazing. Manhattan, of course, has one of the highest rent structures in the world. This is a big number. So Manhattan rents have been tumbling since 2016. This is a big number, though. So at the Plaza Hotel on Fifth Ave, folks, that's the most expensive street, probably outside of Rodeo Drive, and then down in West Palm Beach. You probably, I forgot what street that is, but bottom line is that both between Rodeo Drive and the one in West Palm Beach are small compared to the length of Fifth Avenue. But check this out. Rents fell 13.5% in the last quarter. Monster number. The drop had to do with basically a single space. They cut their rent from... Check this. Well, check when you say drop it, but check out what the rents actually are. I don't even know. I can't even comprehend how someone can actually pay rents up there and make any money. You know, there's many companies that will go up there just for the brand identification, but the rent was dropped from $3,500 a square foot, $3,500 to $2,500. Pretty amazing. Tenants definitely have the upper hand. Right now, across Manhattan, you have 143 retail slots that have been vacant for a year, and the rents have been reduced on more than half of those spaces. Property owners increasingly willing to negotiate flexible terms in an effort to get tenants to commit to the leases. Now, this was quite a change from 2008 after the recession. So after the recession, what you had, folks, is that the rents went up very quickly. They went up very quickly until 2016, and then all of a sudden they just outpaced themselves again. The pace of declines may be slowing. Manhattan average rents fell 12% from a year earlier to $658 a square foot. Let me just give you an idea. So when you start talking numbers like that, this is where this gets really wild. So let's just take the average. You know, let's say you get a tiny store, 1,500. Let's say it's 15. Let's say it's 1,500 feet. That's a tiny store, okay? And if we just take the average rent here, this is sick. What did I say? 658. 658. When you hear this, you know, it blow your mind. That, folks, is $82,000 a month. A month, $82,000 a month. If we take the same 1,500, this is where this gets really bizarre, and we say that, okay, you have the 2,500, that's $312,000 a month. This is crazy. Or $10,000 a day. You know, bottom line is that you can see we are nation of shoppers. There's no doubt about that. Manhattan happens to be the place if they're gonna. I mean, that's going down, but you know, bottom line is that when you start looking at those numbers are absolutely incredible per square foot. You know, what does happen, of course, is that most of those landlords got to hope that they're not leveraged up to the hilt when you have a drop in rents that is that dramatic. And if, of course, what ends up happening, and it's not, I would say that those rents aren't the type of rents that Amazon is going to be hitting on a continual basis. What it was inside that article also is that you have the amount of restaurants that basically either closed or for rent right now are pretty amazing. Okay, so let's take a look at, because there are so many restaurants. I mean, there's a restaurant every 2 or 3 spaces. Let's see what they say. Here it is. The most active category was food and beverage. That has, okay, so check out how they available. The most active category was with 97,000 square feet. Oh yeah, this is actually good. So the most active category was more restaurants and more food. They leased out 97,000 square feet over the second quarter. That's big. And that's got, if you want to see here, let's look at this. That's only 29 transactions. You talk about big restaurants. Okay, so 97,338. What did I say? 29. Look at that. That's so that's 3,300 feet. And then multiply that times 658. So your average restaurant, what did I just say? 3,300 times 658 divided by 12. This is crazy. So the average restaurant, folks, and the way that I did this, I took the aspect of the amount of square feet that was leased in 3 months. I took the 29 transactions just to average it out. That's $180,000 a month divided by, divided by 30. Oh my God. Divided 180. This is crazy. 180. Clear. My God, 6,000 bucks a month. Unreal. $6,000 a day, rather. So $6,000 a day, you're going to basically sell $18,000 worth of food just to break even. Big number. 877-927-6648. Let's see, we get Interactive Brokers also going to be coming out after the close. IBKR. Let's go take a look at how this baby's setting up. So that's trading up $1.99. The low for the year is 36. The high is 80. They have a PE of 25. They're buying this baby now. This baby has been at lows. And let's see what kind of move they're looking for. So the implied option move, when they come out with numbers this afternoon, is going to be a 5.2% move. That's a big move. That's $3 either way. And we've already done the price point of $1.99. Now, Interactive Brokers have just gone from $80 down to $64. You're catching a bounce out here today. Ooh. This is going to be a good one to watch. The reason being is that you hit a high, dramatically light volume. That high was generated in May of 2018. You come down hard. You get a counter trend bounce happening. On a weekly basis, 7 million. Yeah, this thing looks like it's not done going down into $60. And this has been quite a move. I mean, when you bring this back, in 2017, it was at $33, gets all the way up to 80. Let's see if they're going to be coming out right after the close. Yeah, this one, this is saying that it comes out at 1,600. So as soon as they Market closes, that baby is going to basically be popping. Let's go take a look at the Franco-Nevada FNV. Franco-Nevada out here also caught a bid, and this is a big number in Franco-Nevada. It's a royalty stock. I rejected the lows out here today at 72.66. Right now, it's 73.76. Dow Industrials right now trading up 56, NASDAQ up 51, S&P's up 15.5. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 51, Nasdaq's up 49, S&P's are up 14.5. Volume-wise out here, what we have inside the indices, folks, is that you're at 446 on the NYSE. That'll still push in probably, let's see, it's 6 minutes. That'll push in 725 probably. Be interesting to see if they can do that. Inside the Nasdaq Composite, we're at 1.5. That will push in a good 1.8. And if we go take a look at the composite where we stand right now, composite right now, bottom line is laying right at its highs. The intraday high is, whoops, 1 second. The intraday high out here, oh, actually, no, it's at its highs. It's over its highs. The last high was 78.43. Right now, you're at 78.56. Inside that NDX 100, the strength out here is that you got the big retailer down in South America, Millie at 359. That's up 4.5%. Tesla is up 4.5%. Lam Research is up 3.1. Align Technology is up 2. Yeah, Netflix is the loser on the way down. That's down 5%. You get Dish off 2.9%. Comcast is down 2, and you get Vodafone off 1.3. Inside the SPY, what do we have with the SPY? SPY right now trading at a price point of 280.53. That has made it over the last swing, which is 279.48. We are going to be light on volume in a huge way, not in a small way either. We'll see whether they can put any juice into it at the end. Right now, you're at 44 million shares. You're taking a swing out that had light volume on the 13th with 79 million. The small caps, we take a look at the small caps out here, the IWM. That little baby's up with 13. Yesterday, you come down with 15. Small caps still look vulnerable. There's no doubt about that. And of course, what we do have is that Qs. Let's go take a look at the Qs. The Qs gapped down today, and bottom line, they rejected lower price. 26 million shares versus 28 at the high. Stay right there, folks. Lots of numbers coming out after the close. Dow up 53, Nasdaq up 49, S&P's up 15. Coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We had the Dow Industrials close up 55, NASDAQ up 49, S&P's up 15.5. Let's go over to Netflix right away. So Netflix, folks, bottom line, $50 down after the close yesterday, $50 down this morning, came back only $21 down. Not a bad setup, man. You know, you talk about basically taking it back. They took it back. That being said, guess what? You get a high volume low out here laying at 344. That baby will get tested. And what you did, when you put this now in a weekly or a monthly, it doesn't matter which way you want to go with this. Bottom line, what you're going to see is that you broke the trend that has been in place since December of 2017, and you broke it with conviction. Bottom line, when you do that, you came down, heavy volume, you can expect you're going to go back up and test that trend line again. And that trend line, it basically is laying up there at 393. Right now, you're at 379. So don't be surprised it gets up there, gets into that 393, then basically blows apart again, comes all the way down to this 344 number. Big numbers all the way out there. CSX, the big railroad out here, that just come out with numbers. Let's go CSX. Let's go see what that's doing. CSX closed at $64.44. That's trading up $2.66.63, and that was up 44 cents today. Your high up there is 67. Your last swing high is 66.69. And if we do take a look at what they're saying out here, their earnings per share was $1. Their revenue, the estimate had been $3.01 billion. They did $3.1 billion. So bottom line is that they did beat their numbers. Their volume revenue was up 2%. Gold contract got hit down $11.80, trading at $12.27. Silver also went south, down 20 cents, $15.60. XAU, HUI, GDX, different ball game. They all rejected lower price. The GDX finished the day out 21.88, flat for the day. It was down to 21.67. That came into its lowest swing, rejected it. Bottom line, we'll see whether they can get higher price. If we take a look at ABX, which is the second largest weighted structure, that was down 16 cents. What did save the GDX right from the get-go today was Newmont. Newmont traded from a price point of $36.21, ended up closing up at $36.39. So bottom line, it looks to me like we are going to basically continue higher after you rejected that lower swing point inside the GDX. Bitcoin, let's go take a look at Bitcoin. Bitcoin caught a bid out here today. Bitcoin up $653 in a matter of 2 days. Bitcoin has gone from a price point of $6,081. We are at $73.15, so big number on Bitcoin, no two ways about that. And what we're going to see, we're going to talk to out here is our man, Mr. Jason Path. He was all over that baby. We'll have him bisect and dissect that baby. He's going to be on in the next section. Notes and bonds. Bottom line, folks, these notes and bonds, they continue to want higher price. Now, it's pretty amazing. What you had is this. You had Powell testifying at 10 o'clock this morning in front of the Senate Banking Committee, which he does twice a year. They were grilling him on the stress test for the banks. They were grilling him on the spread inverted yield. The yield is not inverted yet. They were asking him questions about the inverted yield. They were asking him about interest rates. Bottom line is that he felt that things are going well. He did feel that trade barriers do threaten wages and growth. That's the bottom line. But he felt that we were still going forward and they were still going to raise short-term interest rates. That being said, the market is saying something totally different. So the market, bottom line, the 10-year, down 2 ticks, 120.03. 30-year off 3 ticks, 145.01. They both continue to want to get into the highs that were generated out here on May 30th. The 30-year happens to be right beside it. If we take a look at the 10-year right now is trading at yield at 2.862. The high for the last 3 months is 3.1. So bottom line, we'll see how that shakes out. But they're buying it. If they're buying it, folks, that means yields are going down, prices are going up. Oil's trading $68.04. Bottom line, oil came off the highs last week of 74. You're at 68. It looks like we're going to have the API numbers out tomorrow at 4:30. EIA Thursday at 10:30. You might get a small bounce here, but it looks on a longer basis this wants to run down to about the 64 level. King dollar traded higher today. You had juice behind the move too. King dollar did 18,000 contracts. Now that's not a huge amount of contracts, but bottom line is it is expansion of contract volume as you're moving to higher price. So what we have out here is this. You're at 94,720. Bottom line, that's going to go after the highs once again. The highs we're talking about out here are the 95,220. And what you do have with the dollar is this. The dollar index has been trying to take out the October 2016 high for about 8 weeks right now. The first time we got up there was the week of May 25th. June 1st. The highs we're talking about 95.070. Each and every time we've gone up there, it's given it up. Now, the intriguing thing is that it's not that there's a lot of flack at this level either. I mean, the bottom line is that, it only traded up there 3 weeks. So we'll see how this shakes out as we get back up there again, because what King Dollar has done is this. Each and every time that it's gone up there, hasn't had the juice, backs down. The first time that we had any type of volume on the way down was the day of May 29th. The first time that we went up there, you got to a price point of 95.220. You backed down with dramatically lighter volume. It was like, okay, man, you're going topside again. Second time, it had a chance to go lower. You had an expansion of volume. Second time, we came down with 28,000 contracts. Bottom line, it did go lower, but it didn't get into the bottom of its strength. Third time, yesterday we had anemic volume on the way down. You only had 12,000. So bottom line, this thing wants to go after its highs once again. Stay right there, folks. We got our man, Mr. Jason Paff, coming back. And you can check out his newsletter at thedutchbook.com. We're going to be growling a problem with him in the next segment. Dow up 55, NASDAQ up 49, S&P's up 15. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 55, Nasdaq up 49, S&P's up 14.5. Let's go over to our man, Mr. Jason Path, as we do each and every Tuesday at 20 past the second hour, as well as Thursday and Monday morning, folks. You can get Jason's newsletter at thedutchbook.com. Jason Path, what's going on, brother?
Not much, man. How are you, Tom?
Good, man. Well, man, you got some action out here. You got your Bitcoin. Let's start there. This is pretty cool, man.
Yeah, I was on the launch pad, took off. We definitely saw a couple of moves, really. Two really strong moves, one to 67.68. And then, again, clearly, you know, beyond that, 7,300. That 7,000 level had been pivotal.
Yeah.
Folks forget, you know, back in early May, we were almost at 10,000.
Right.
We got to like 9,900. So, but it's been a steep drop since. So we've remained constructive after we bottomed at 5,800. We touched it twice, kind of a double bottom scenario in late June. We've seen core metrics recover. Transactions has been stable. Transaction per user, dollar per transaction, all of those core daily metrics that we follow have been stable, which tells us the market's healing.
Yes.
I think we got some positive news, a lot of news. You know, we talked about BlackRock yesterday.
Yeah.
I saw an article today. Imagine this: the CFA is going to add crypto content to the exam. I mean, who would have thought that a month ago, right? So that hit the wire. I saw that today. So I think you've had some positive news, absence of negative news, stable trends. It's a fixed supply environment, and the more demand that slowly, incrementally piles in keeps this constructive over the long term, in our view. You know, what's interesting is that what you just said about the aspect that it just being stable. So that's pretty cool, because the reality is that when you're looking at a market, folks, okay, you know, the bottom line is that you're talking about supply and demand curves, okay? And if you get a market that stabilizes, like, you know, Bitcoin went from 19,000 down to, what, 5,900, 5,800, whatever it was. Yeah. The bottom line is that is really showing some big strength if it can go up like this and it's just stable, right? I mean, because once it starts again, I know we're going to get a call from Paul and a couple of these other crypto guys, man, because they're in these other cryptocurrencies too, and they love trading them. Do you know what I mean? Yeah. So stable has been positive, and then rising has been meteoric, and it'll be interesting to see at what level. You know, for me, it's like the Today Show test. Not to bring up competing programming, but you know, when my wife is watching something about Bitcoin on, you know, Saturday morning today, we know the mania is back. I don't think we're there yet, right? But, you know, the stabilization has been really important. To your point, we've seen search very stable. The other thing I mentioned to folks too. Folks want to correlate the meteoric rise to the meteoric moves in some of those metrics I mentioned that we saw late last year. Okay. And I've been talking a lot more lately about a retention factor. You're not going to have a one-for-one correlation anymore, because some of those folks, now granted not all of them and not even the majority of them, but 30 to 40% of the folks that were there at 19,000 are still active within a 30-day period. Yeah. So the longer you continue to build some form of retention factor, you're not going to need this same wave of new organic demand, because, you know, we've already minted or mined 3/4 of all Bitcoin that's going to be mined. Again, no one knows exactly how that's going to play out, but with fixed supply, stable demand means a pretty constructive view on price. Yeah, and I guess when we take a look at the aspect, I mean, a couple of articles are saying that 20% of Bitcoin is actually, well, actually, it can't be gone, right? I think when they were saying, is it stolen or gone? I mean, it's just inaccessible. So, you know, with all the security protocols, there's nobody to call if you forgot your password to your wallet, right? And so, the way I read that, and I saw that in the journal, it was you know, it's in an exchange that somebody can't log into. Yes. Or, you know, somebody forgot where the wallet is. If you downloaded a wallet onto a laptop and you lose that laptop, that's it. So. Man. 20%'s gone. You know, who knows how it plays out, but with the supply being so fixed, any new organic demand has to correlate at some level to a constructive upward move in price. Brave new world, isn't it? It's crazy, man. It's a lot of fun, you know, to do what we do. So I'm grateful to be, you know, just able to study it. Particularly when you hit it just like this. This is cool, man. Yeah, man. Because it could have died. You know, it was so cool, folks. If you've been listening to Jason on the program, you know, the bottom line is he puts a huge amount of data together, looking at different things. And bottom line, you know, he was feeling that, hey, listen, man, this data is saying that this is a good spot. And bottom line is that, we'll find out what happens. But when
an equity, well, a Bitcoin takes off like this, it's going to be a lot easier. There's going to be people scratching their head at home tonight saying, "Oh no, I gotta go, I gotta buy."
That's right. That's right. Yeah. So
Yeah.
we'll keep our eye on the data because this market will move.
Totally.
It will not stay here. I can.
No, I'm with it. So let's get into the oil market next. Talk to me about oil. You know, and that's another one that you're at 75. You felt that was a topping. You're not looking for disaster, but the bottom line, you felt it was a topping issue out there.
Yeah, there's some data that I don't think folks are really well aware of. We're actually up on inventories over the last 6 months. We're 14 million barrels higher than we were in March.
Okay.
I was talking with somebody who really studies the market closely, and he was talking about falling inventories. And week to week, and last week we had a massive draw, but we're actually incrementally up on inventories. The number of disruptions, that gets a lot of news. We see a disruption in Canada and some other, the North Sea, but as reported by the EIA, we're actually near a 5-year low on the amount of supply that's as a part of some unplanned production outage.
Okay.
Libya's back online. This is really a supply-demand story for us. Supply rages domestically in the United States. We're at the midpoint on a 5-year average and incrementally rising. We're at record levels of supply. Demand is not growing that fast. The dollar strengthens. The world picture is getting choppier in terms of growth, and we just feel fair value is closer to 55 given all of the data that we look at.
Yes.
And it's never going to work out perfectly, but we're looking at a 55 handle on oil as we exit 2018. Clearly, we've had some moves over the last week that are in line with that. A lot still to go, but Saudi and Russia, they're up about 500,000 barrels. They haven't even gotten started filling the tankers that they ordered for delivery in August. I think they're going to be way topside to what they said. I think definitely with the midterm elections, you'll see, President Trump leaning on anyone he can to increase supply.
Sure.
And demand just, it's 3%. It's plodding along, and it's just not growing as fast as, we've added 1.5 million barrels in the last year just in the United States.
It's huge. Well, and you made a great point about the aspect of the dollar being strong because, what happens, folks, oil's priced in dollars, and, the higher the dollar goes, well, guess what? You can do a differential on oil coming down a little. In those countries, it's still making money hand over fist. Right?
That's right.
Yeah.
Yeah, absolutely.
So here, your 95's coming on this dollar. Talk to me about this dollar.
Yeah, another area we've been constructive on the dollar for a while. I think 95 is going to be a support clearly. And you mentioned it's been a while since we've cleared it and stayed there, but I think once we do, and I see that by the end of the week, that'll be a solid level of support. It's really a two-part phenomenon. There's definitely economic positive growth in the United States. It's definitely a good story.
Yes.
But it's also about the weakness we see across the world. And we make the joke in our newsletter, the dollar's a valedictorian at summer school, man. It's just as much about the company you keep as strong as you are in your own one area. So when you look at weakness around the world, you look at simple interest rate differentials.
Yep.
The United States is really getting out in front of some very developed countries in terms of rates. I think the market, the one thing that does give us pause on the dollar, the market is so hungry for a counter narrative.
Yeah.
You see the euro talk about maybe raising rates in 2019, and it takes off for a day or two.
Here, can you stay there for a second?
Absolutely.
Awesome, man. Stay right there, folks. When Jason and I come back, I'm going to ask him about these dollar bonds, because what has happened is that dollar bonds in other countries, basically have gone down pretty dramatically, meaning when they're pushing out debt. Jason and I are going to come right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We're talking on Mr. Jason Path from the Dutch book. Right now, we're talking the dollar. You know, what I wanted to get into a little is that, you know, a few years ago, Jason, right, the rest of the world, they're all pushing out dollar bonds. And specifically, folks, what dollar bonds are is this, is that you have countries overseas, bottom line, you get companies overseas. They are pushing out debt, and they'll push it out, and they can push it out in any currency, but bottom line, they were pushing it out in dollars. And you know, the correlation there was a couple different correlations. One of them was that there was just so much bread going on. Now, that has come down dramatically this year. And I was looking at that this morning, I'm saying to myself, well, this is going to get interesting. Now, I thought when they were pushing that out, they were out of their mind. And I said when I was on the air, because I've seen this in the past, basically, you know, you get a country pushing out dollar bonds, folks. They're taking a risk that's dramatic because the bottom line is that they're doing business in a different country. If the dollar goes up, they're going to pay it back in U.S. dollars. Okay, so now these companies that have done this are getting toasted. What's going to be intriguing, I think the article today in Bloomberg said that the numbers are down like 13 to 14% this year. Yeah. So that's going to get kind of intriguing. Do you know what I mean? That the dollar's getting so expensive that, okay, you know, do they want, because what happens also, folks, is that when you push it out in dollar bonds, you need dollars in order to do the initial deal. You need dollars to pay the interest rate. You know, so as that comes back, you know, so the question is, what do you think?
Yeah, so, you know, huge outflows, as you said. Yeah, the number I saw was 14%.
Yes.
So clearly, as you well explained, folks are exposed to a level of risk with a rising dollar. I think if we start 2-3 years from now and look back, I think one of the major stories from this point in the cycle that we're going to really want to think about is, and what we see happening today is, the dollar, the United States typically brings other countries with them during expansion, right? Yes. We're buying commodities out of Australia. It's spreading. Now, we've seen that more recently over the last decade or so with China, but China's cooling off, and we're very bearish on China right now.
Yes.
The United States is as I said earlier, it's moving to the head of the class. Now, it's a rather weak class, but it's not cascading the way it has. And so when you have EM, typically, you know, they'd have similar moves maybe in their currency for a variety of reasons. But what we're seeing now is they're so exposed to a much stronger dollar than the rest of the world that, to your point, there's concern, can those companies pay it back? Even if they can, is it too expensive?
Right.
You know, local currency debt was up, I saw 4%. So clearly it's not balance there. There's not parity, but they're summarized there. But then that's a whole nother set of issues, right? Because there was a reason, folks, to your point, it wasn't necessarily the best idea for everybody, but there's a reason folks wanted to get away from the local. You talk about Argentina right now. Oh. I really don't want anybody's debt and,
No, we all got to go to Argentina to have some steaks.
I know, that's right, man. Some cigars and some steaks.
Seriously, man.
Talk about it.
Just to give you an idea, folks, take a look at this. If you want an idea of the expense ratio in Argentina. In Argentina, folks, okay, they have steaks that I heard, I've never been there, that are incredible, okay? The bottom line is that 3 months ago, it was 20 pesos to $1 US. It's 27 right now, And if I ever go back a couple of years, forget it. A couple of years ago, it was 14 pesos now to 27. That's hard to comprehend, isn't it?
You can't live that way. It's unsustainable. No. So the net calculation we're looking at is if you've got less dollar-denominated debt, you have some uptick, but not enough in local currency. There's just less debt rolling through EM. That's less to finance growth and expansion. That's just ultimately, again, a bearish case for EM. There's less money that typically those markets would have because they've always financed growth through first world debt, and as there's what's 10% less, that's a massive amount of money. So we see large outflows, whether it's China, Argentina, Brazil, large outflows from Western American investment to more established assets. That's net negative. And then if they can't finance in the future, even if it's 10% down, 10% less, it's a lever though, right? It's not 10% less growth. 10% may have led to 15 or 20.
Sure.
You're talking about Brazil or somewhere with some energy that could really use some infrastructure. It's a massive problem. They can't get a win, right? What's the narrative for EM right now? People will say valuations, but again, a guy like me is like, there's a reason valuations are low, and guess what? They're going lower in our view.
And they've gone lower, dramatically lower. I don't know if you saw the story. There's a story out here today, folks, just about raising money in China, and you had a couple of young guys that have been raising money. Bottom line, 3 years ago, they raised like 34 million in basically a couple of weeks, right? They were going for another fund out here. Guess what? 6 months, they only could raise $3 million. And what the guy was saying is that it's not even close to where it was 3 years ago. And 3 years ago, they weren't in that great a shape.
That's right. I mean, 3 years ago, it wasn't great, but it was certainly better. Yeah, when that money continues to dry up, and again, when we really learn the impact of the easing and now the tightening,
he's going to be right back, folks. The gremlins just have him for a second.
I think EM is much lower, and to your point, this is going to get a lot worse.
Let's talk about the yuan a little, because when it's amazing. I remember when I started the Gold Report, the bottom line, whether it was Jim Rogers and a lot of other basically very smart people said, no, just take all your dollars and put them into yuan, and you're going to be all set. And it's like, well, that not only hasn't happened, this Chinese yuan is basically taken a beating.
Yeah, and we crossed 6.7 on dollar yuan today. We think we go to 6.8 pretty quickly. If you go a quarter or two out, again, China's slowing, and it's turning more negative in our view. Shanghai index is getting hit hard. They really have two levers. They have debt and they have their currency, and they've stuck pretty closely. I do give them some credit on their deleveraging plan.
Okay.
They've hewed to that pretty well. I'm sure it's tempting to unwind some of that. They stuck to it. All they've got left is let the currency weaken. I just don't know another lever, kind of like we were talking about the rest of EM. I just don't know what the positive narrative is. The world is getting less globalized, whether folks like it or not. They're getting hit on trade. Their own economy is slowing down. It's just, so I think they let the currency weaken. I think 6.7, we crossed that in the last 24 hours. I think we get to 6.8, and I just think it keeps getting weaker and weaker and weaker, and more weakness will cascade into more weakness. Clearly there's a bottom at some point, but that's not even on the horizon in our view. I think this is, I think we're probably in a middle frame of a 9-inning game. This is like inning 4 or 5.
Yeah, and what's so intriguing, I mean, is that, Netflix last night basically shook it off. Markets shake it off. I mean, our markets seem to shake everything off.
That's right. That's right. Well, money's got to go somewhere, and again, you're better than most other places because, if
because there is so much money out there, right? That's the bottom line.
Absolutely. Yeah, absolutely.
Huge amounts of money. Listen, folks, it's thedutchbook.com. It's a great newsletter. Of course, you can hear them every Tuesday, every Thursday, Monday morning with Tommy and I. That's at 40 past the hour. Great analysis, man. I'm telling you.
Man.
And congratulations on between the oil and the Bitcoin, man. I'm sure you have a lot of others, but that was so fun watching. The oil was fun because it's interesting. Both of them came out of nowhere. The oil went south like nothing, and today Bitcoin just, Bitcoin you can see is grind, and then just took off like a rocket ship.
Takes off, man. That's why we do what we do.
It's a beautiful thing. Look forward to speaking to you Thursday, man.
Look forward to it, man.
Okay, have a great one, man. Have a safe one. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers now use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow up 55, NASDAQ up 49, S&P's up 16.5. Well, here we go again, folks. Bottom line, it doesn't take much. News cycle-wise, there's always going to be something happening, so you don't basically pay attention to what is really going on. Bottom line, Trump administration is just opened an investigation into uranium imports, which are hurting national security. U.S. uranium producers, Energy Fuels filed a petition in January asking the Commerce Department to investigate the matter under the Section 232 of the 1960 Trade Expansion Act. If we go over to, you know, the ironic part, I'll go through this with you folks, but bottom line is that we don't even have a lot of uranium mines. So this is where this is going to get really interesting as to how this is going to shake out. And guess what? The largest mine outside of, well, you got Kazakhstan and you got Canada. CCJ, which is Cameco, they have the largest uranium mine in basically the free world. That closed at $10.94. That is trading at $11.29 right now, and it's going to be intriguing. So they let me see what they take revenue. This is the cigar mine that they have. Yeah, so they take in $1.9 billion. And uranium's like any other metal. That's the bottom line. Is that you know, bottom line, it fluctuates in price. Out of the 1.9 million, at Cameco, 1.6 of that is in uranium. So let's see what they're saying out here. So the Commerce Department, they're declining to basically comment, but more than likely someone in the Commerce Department just put this out. Okay, so what's interesting is that they're going to put a tariff on it. That's what they're looking at. So U.S. miners right now supply less than 5% of the domestic consumption. You have, here's a quote from the Chief Operating Officer of Energy Fuels. The global uranium market is not a level playing field, says Paul Gorgeson, Chief Operating. It puts the country at real risk because we're increasingly dependent on these state-owned companies, which obviously have different global strategic objectives than we do. That's, folks, the thing that's amazing about this. We could buy, as a country, as much uranium as you want. The bottom line is that, if you didn't know this, uranium is basically all over the place. You know, Cameco would love to keep selling more uranium. And, you know, that's the bottom line. So we'll see where this shakes out. Let me see where this company is. Energy Fields, E-N-E-R-G. If it's even Energy Fields. Yeah, so it's not even a public company. That's the bottom line. Yeah, it's not a public company. Canada and Kazakhstan, those are the two main sources. Then they're followed by Australia and Uzbekistan. 90% of the uranium delivered to the U.S. reactors was from foreign nations in 2016. Well, guess what? It's not like you basically. It's not a metal that is in short supply. So we'll see where that whole baby shakes out. If we go take a look at let me just see, you know, there's not too many other companies here. Let me pull this up for a second, CCJ, just to see. I don't believe there's one American company that's a public company. You got Cameco. You got, let me see it, Ivanhoe. I don't think Ivanhoe, IVN. I don't think they're into uranium. Ivanhoe's trading at 259. If we break that out, no, yeah, that's just that's the expiration stock. They're taking in 3 million right now. Okay, so here, let's do this. Well, this will be interesting. So this is NXE. This is so this is Next Gen Energy. They operate a special purpose uranium exploration company. Oh, this is an exploration company. But bottom line is this company's in Canada also. They just start, no, they haven't done anything yet. It's trading at 253. It's trading 253. What's going to be interesting about this is that as to what the, you know, are these two private companies that bottom line brought the Commerce Department into it? They decided, okay, let's put some tariffs on it. What's blowing my mind about this particular one is that when you turn around and you put a tariff on it, in this particular case, you're putting the only big uranium users out here, right, are all the nuclear plants. It's like, okay, why? The easiest way. So picture a little common sense here. The easiest way, if you want uranium, okay, this chief operating officer of the company is saying that it's a fixed game. Well, it's not a fixed game because the price of uranium goes up and down dramatically. Let me pull this up. I'm going to get this price of uranium. I can find this price of uranium and get a chart so that we can actually see when I show you the swings in this price, in this metal, it's pretty dramatic. Okay, so let me see. Here we go. Here's the commodity. That's a swap commodity. Let me see if I can get it on this one. $23. That might be it. $23 a ton, maybe. Let me see. Okay, beautiful. Okay, so here we go. I got this. Okay, so this is $23. 250 pounds is 23 bucks. I bring this back. Oh, look at this. This was at $20 3 months ago. Wonder if I can bring this back. Oh, this is beautiful. So check this out. This is amazing, actually, when you think about it. So I just brought this back to 2007. So in 2007, folks, you had uranium. Now, each contract is $250. You had uranium trading at $80 per 250 pounds, right? Bottom line is that we hit a low in November of 2016 at $17.75. And guess what? We're at $23.35. There's so much uranium out there, it's sick. So that's certainly not higher prices. What that's going to be is this. That's going to be a fixed game, and the fixed game is going to be the companies that basically brought the case, and the Commerce Department going along with it. Bottom line, what do they want to do? They just want to rock and roll once again. And I suspect that if we go back, and I'm going to do this maybe tomorrow or the next day, find out exactly how much soft money and how many lobbyists they pushed into the administration to turn around and say, okay, listen, Wilbur, we need some more taxes on this company. We're going to go make some money. Because you're going to remember something. Wilbur Ross he's the top dog in this. He did it with the steel companies, took apart the steel companies, took apart the whole industry. Dow up 55, Nasdaq up 49, S&P's up 17.5. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go take a look at United Airlines. United just come out with numbers. United closed at $72.62. That's trading at $75.15. And $75.15 is, we're at the last swing high, which was on the 22nd of June. That is going into the downdraft that was created out here on in January. So it's going to be intriguing. That downdraft was pretty extensive. 27 million on the way down. We're going to basically try to get into that once again tomorrow morning. Numbers on United Airlines go like this. The earnings estimate was $3.06. They made $3.23. The revenue, operating revenue, $10.72 billion. They did $10.78 billion. So bottom line is that they did more revenue, but their earnings per share went up pretty dramatically versus that. Their year, let's see what they're saying for the year. The estimate had been $7.73. Now they see, yeah, that's a good one, because they see they had the low end of $7 to $8.50. Now they've upped that to $7.25 to $8.75. They did beat by 17 cents. CSX also, bottom line, beat out there. Yeah, the rail company, that closed at $64.44. That's trading at $66.44. Number-wise go like this. Earnings per share were $1.01. The estimate had been $3.01 billion. They did $3.10 billion. And that's an impressive number, particularly because what you're going to see out here is that you know, that's a big commodity deal, and bottom line is that they're pushing freight around. Over in the futures markets, lean hogs still have problem child out here. You're at 52 cents a pound. You talk about getting smoked. This thing is down in 5 months from 71 cents a pound to 52 cents a pound. So bottom line, we're going to have lots of bacon running around this good old country of ours, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night, safe night. We look forward to speaking right back here tomorrow morning, 8 o'clock. Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.